capital market is an important part of the financial system that provides a platform for the trading of long-term securities like stocks, bonds, debentures, and other financial instruments. It provides a mechanism for businesses, industries, and governments to raise long-term funds for their development needs, while giving investors gaining opportunities to grow their wealth. In this article, we are going to cover capital markets, its types, its historical background and evolution, as well as its functions. Capital markets. The capital market provides the opportunity for transfer of funds from savers and households to entities that require capital, making sure that resources are channeled into productive investments. By allowing this flow, the capital market plays an important role in fostering economic growth, industrial development, and financial stability. Capital markets types. The capital markets have various segments that manage specific financial instruments and investment purposes. Here is a table representing the different types of capital markets. Capital market type description examples. Commodities market. Market for trading physical goods and raw materials. Multi-commodity exchange, MCX, DEX. Debt market. Market for debt instruments, providing fixed returns. Government bonds, corporate bonds, debentures. Derivatives market. Market for trading contracts derived from underlying assets. Futures, options, swaps. Equity market. Market for buying and selling company ownership shares. NSE, BSE. Foreign exchange market. Market for trading global currencies. Forex market, interbank market. Money market. Market for short-term borrowing and lending. Treasury bills, certificates of deposit. Mortgage market. Market for mortgage-related securities. Mortgage-backed securities, MBS. Primary market. Market where new securities are issued. IPOs, rights issues. Secondary market. Market for trading existing securities. Stock exchanges, OTC markets. Capital market in India. The capital markets in India have evolved into dynamic and regulated systems all over the world. The capital market of India can be divided into two components. Primary market. In this market, new securities are issued by companies and governments to raise fresh capital. This includes IPOs, right issues, private placements. Secondary market. In this market, existing securities are traded among investors and facilitated by major stock exchanges like the NSE and BSE. Key institutions supporting India's capital market include stock exchanges. NSE and BSE provide electronic platforms for trading. Depositories, NSDL and CDSL manage the dematerialized form of securities. Regulatory authority, the Securities and Exchange Board of India, SEBI, established in 1988 and given statutory powers in 1992, regulates, develops, and safeguards the capital market. Capital market instruments. The capital markets in India consist of many instruments that cater to different investment needs. Instrument meaning. Bonds. Fixed income securities issued by governments and corporations. Debentures. Long-term instruments with fixed interest returns. Equity shares. Represent ownership in companies, offering dividends, and voting rights. Mutual funds. Pooled funds invested in diversified securities. ETFs. Exchange-traded investment baskets that mirror indices. Preference shares. Provide fixed dividends and priority in liquidation. Commercial paper. Short-term corporate borrowing instruments. Derivatives. Risk management tools like futures, options, and swaps. Rights and INVITS. Investment in real estate and infrastructure projects. Treasury bills. Short-term government securities. Capital market of India. Historical background. The origin of capital markets in India can be traced back on the following lines. 1875, the Bombay Stock Exchange, BSE, was established. This was India's first stock exchange. 1988 SEBI was created as a regulatory body. 1992 NSE was launched and SEBI got statutory empowered by introduction of electronic trading. 1996 the Depositories Act was enacted. This led to the creation of NSDL and CDSL and helped in dematerialization. 2000s onwards trading reforms were liberalized, online trading was introduced and foreign institutional investors were integrated. These reforms have made India's capital market modern, transparent, and globally competitive. Capital market functions. The capital market performs many important functions in an economy. Capital mobilization facilitates raising of long-term funds for governments and businesses. Investment opportunities provides avenues for investors to diversify and earn returns. Liquidity provision ensures securities can be easily bought and sold. Price determination, market forces establish fair and transparent security prices. Risk management, derivatives and other instruments help hedge against uncertainties. Efficient allocation of resources directs savings into productive enterprises. Wealth generation provides opportunities for individuals and institutions to accumulate wealth. Corporate governance showcases transparency and accountability in listed companies.